Good morning. So a little more follow through to the downside here. Things I think are looking pretty good. We're setting up a bounce probably, well, could be today, but see what tomorrow brings or next week. Right now, as they're on the verge of, I guess, who's going to blink, get out of town by midnight or what's coming. We'll see maybe tomorrow. If things don't bounce here today, probably maybe on the news, actually it gaps down and then we get the reversal tomorrow, but we'll see how it all unfolds. Right now, it's just trending down. It's obvious that sellers are in control. And as we get closer to support areas, that's where we're likely to get some bounces. Now, see, this is a big wide area right here, looking at the Dow futures. And maybe better to go to the diamonds here. But anyway, the 200 MA tends to be the targetable area during corrections, and that's a way off already. But let's just see what the distance is down to the 200. Everything that I'm looking at seems to line up with about a 5 to 6% correction to the 200 MA, and we'll see if it gets there. Intraday we follow the hourly and 5-minute charts, and then look to see at a minimum can the 5-minute reverse trend by trading above an area of major resistance. Of course, when it begins to sell off and get climactic, sometimes that will settle low, and then we see as it forms a W type of bottom, and then start the basing pattern and see things bottom out. But anyway, what we see is the Dow futures here are retesting that bottoming tail from a couple of days ago. So that's going to be at least a short-term reference point where, buyers will step up. Actually, it's right there. And you can see it's right there. And it already tested it one time, I see. So we'll see if this can make a low. Right now, the assumption is it's just going to keep going down if it doesn't make a significant reversal there. And just logically, I don't see why it should, since we're waiting for the news tonight. Peter has saying, watching the gap trading video from yesterday, about halfway through, I don't really have a clear picture of what a void is. It's a large space between support and resistance. Exactly, Peter. That's a simple definition of what is a void. A large space between support and resistance. So this here, is a void down to here. As prices broke this level, there was a little minor void there. And you see as it came down, and then when it broke that level, because of the strength of the move up, the momentum, there was no support. So that's why I'm looking for this area down here. That's a simple definition. And just like the way this is beginning on the 5-minute to accelerate lower. It's breaking support here, but it's beginning to create a void, little shelf there. The takeaway from that is, look, prices move between support and resistance. And when they break one level of price support, they move to the next one. Leader, I'm talking to someone on YouTube that asked me a question, so it wasn't posted here. I was just explaining that. Anyway, selling is picking up here to the downside, wider range bar on the 5-minute. As it broke that level, stops got hit. And you see for a few hours there, those buyers that picked up at that level, I guess, was hoping that it would raise back up at that point, and it didn't. So down she goes. Let's go to the S&Ps. They had already broken. So with the S&Ps having broken, that odds were the Dow wasn't going to hold. But you can see here, things are picking up to the downside. And you got to know your reference points, right? So here into the void, the 50 MA didn't hold. That's a subjective reference point, but it's something widely followed. It cut right through that. So the unfilled gap here is... Wow. My dog ripping things apart here. unfilled gap, and down here, this other level. So while the 200 is down here, we have reference points above that, and that price support level is what would be much more significant than this line here, but we'll see. And we also got a 2,800 level. So that's a big whole number. So that'll be a focal point as well. So when we see points like this, we follow on a smaller time frame and see, does it bottom out here? Can it reverse? And odds of a significant reversal happen when prices get to a reference point like this unfilled gap or big whole numbers. NQs, right, they're coming down to the 50, and we measured that out. It was yesterday, so almost 5%, give or take a little bit at the 50 MA, 7,500. So we look for subjective reference points. From my point of view, those are moving averages widely followed on a daily time frame. Simple, 20, 50, 200. We can look at whole numbers that can come into play. And then, of course, we have things like unfilled gaps. So but let's see what happens at 7,500. I think that's a reasonable target for today as things are accelerating lower, to see if it bounces from there. All right, let's look at the ETFs for those that don't have the futures. And it kind of lines up with the same areas pretty much. So you've got more gaps here because of the overnight trading, of course, whereas the futures are trading not quite 24 hours, but you have more complete bars. So lots of gaps here. But you've got a level here and this wider level, and there's the 200. And so right now it is, I usually have this on a weekly, but we know the weekly pattern now has turned bearish. Okay, that's on 24 hour. That's on auto, actually. Hold on. 24 hour. So the dime is a little less actively trading, but they're at 257, 256. So somewhere down in this level here. So coming closer to that support, but the 200 down below. So what we're doing here is finding our reference points. So if you're short, right, you want to know your reference point where buyers are likely to step up. I'm going to change this to 24 hours. Are likely to step up. So you can see if the market begins to turn at those points. And so the 50 MA is around 285.40. We're down below that. We're just down below, but big wide gap. Now you see when you have these voids, prices have a higher tendency to move rapidly. SPX point. We'll get to the Qs and then we'll get to the cash market. So down at 283.50-ish, bouncing from there. 283.50. And so you can see it pushed through this little level. And the little congestion areas there really aren't much of anything to really count on as being significant. So you've got the 50 MA down here, and it gapped up. So this, we've got areas, and so you focus on your areas, whether it's a moving average or a price level. And as intraday traders, and since we're all here at 9 o'clock, we're intraday traders. And you then look at your smaller time frame to see what it does, whether, ideally down at one of the significant levels. But as it's trending down intraday, that doesn't mean it won't stabilize at, say, a reversal period, 10 o'clock or 10:30, or possibly a different market. Say the S&Ps were to reach some support and the Qs didn't, that could certainly get the Qs to begin to stabilize. So we watch patterns. We see if this begins to pivot. We take note of where major resistance is, see if it bases out. Maybe it starts moving up. So we're here processing the information to see how things line up in multiple time frames. That's what we do in the green room every day. market retracement bars are bigger, more profit taking. So Tony, when you say retracement, it leads me to think, retracement back up versus dropping down. But if you're talking retracement or drops to the downside as the ranges begin to expand, that tells us that things are getting a little climactic within that time frame. As you can see here, look at this 5-minute chart. There's nothing climactic here. And look at the size of the bars. They're about equal in length. So while prices are going down here, we don't yet have big wide range bars telling us that the majorities are now selling without thinking at any point. So, or just, fear coming into the market. So we look for, as prices begin to trend down, when the bars are staying about equal in size, say, well, sellers are in control, but who's ever long isn't really dumping yet, and with that fear. So we look for the ranges to begin to expand. So bigger bars then could tell us that actually the end of the move is near. So we always combine concepts, meaning range expansion at the 50 MA, odds are pretty good that you're going to get a bounce. And then we see if it can form a base, a W bottom, a head and shoulders bottom, whatever on a smaller time frame, and then begin to see if things will reverse back up again. Russell, 155.50 here at the bottom of the base, and this was underperforming. So it's, believe it or not, this is actually showing relative strength by not falling as much as the others. So this whole trade war thing with China, as it's evolved over the last year or so, is that the small caps have less exposure overseas, so they're not pounded as much. So if you're not trading this, it's a good idea to keep an eye on it to see whether it violates the support in any significant way, or whether the other markets reach their reference points that we've already covered, and maybe this one holds this level and actually turns back up again and begins to lead the way higher. So that's something to keep an eye on as well. So these intermarket relationships can be a huge help, whereas maybe you're just focused on the NASDAQ 100, the Qs, and you're saying, well, that's not at a reference point yet, or maybe it is. And, the Russell over here could be what actually leads the way up because of what I just said. So we'll see. Transports, some activity pre-market. You usually don't see that. So today is special in some way. Actually the selling here is a little more intense than typical. These gap downs, what we'll do in the room is to see the percentage of the gap down. Historically, more than a 1% gap gets bought, but we'll see. So 189, 190, and so we're down here around this level, breaking down through the converging 50 and 200, and there's nothing here. So, this is what, we will do in the room, is monitor all of these markets and see which ones begin to hold, which ones start to turn or don't, to formulate a bias as to whether things are turning or not. Mid caps, holding up a little better. They're down here at 180, 148, 148. So breaking down through the 50, unfilled gap down below here, and the 200, give or take. And, we just kind of pretty much, 4.4%, and maybe it actually comes down here to this level. Anyway, everything that I look at here is suggestive of about a 5% correction, which historically over the last several years has been about what we've seen. So we'll see how it all plays out. We wanted me to look at the cash market here. So let's see the movement. And, we're going to come up with pretty much the same levels or ideas. Unfilled gap, support area down here, 2,800 and 50 MA, which it's going to slice through that. So there's really nothing. There's really nothing here before this unfilled gap as a reference point. So this is the void concept. And so let me just go back to the S&Ps for a minute. See where they're at. So the unfilled gap there, 2840-ish. A little bit of stabilization here just before the open. Well, we got a little ways before the open, but a little bit of a climactic. See the range expansion bar on the futures? It's easier, cleaner to see this type of price action with the futures. I'm not saying you absolutely have to have futures, especially during the trading hours. The spiders will work fine. Is this gap on a Monday? It could be. Let's see, April 1st. April 1st. What was April 1st? Let's go have a look. Can't be considered as a gap. Well, I don't know. Alex, you're saying it can't be considered as a gap because it is on a Monday. I tend to not overthink things, quite honestly. You know, over the years where you start to think in more detailed levels like that, is that a gap or not? Look, it's a gap. Prices gapped up and they couldn't fill it, whether it was a Monday, a Tuesday, or a Thursday. It gapped up and it went. So it's unfilled. And, you know, if it gets down there, I'll be paying attention to it. That does ultimately mean that that is where it's going to turn. I have no idea whatsoever if it will. But when it gets there, I'll just watch what the 5 minutes doing. Is it climactic? Is it a W bottom? Does it base out there? Does it try and retrace? And I'll make a decision whether I want to do some type of counter trend trade. Ultimately, from a swing trading point of view, I'm hoping prices get down here and for the full correction, and where we would then see sentiment and breadth all lined up, which I'll just take a look at with you shortly here, you know, for the moment, which we can see that sentiment is not down at a bullish level yet. So there's gas in the tank for these option traders to really start loading up with puts, that lining up with prices at a significant level like 280 or maybe at the 200. Those wrong way option traders loading their eyeballs with betting on a crash, breadth. And if this correction does drop like that, breadth could be around a minus 300, which alignment of these internals like that, historically, buy it. All right. So let's see what happens with that. And one of the things I wrote about in the letter, on Monday's letter, was that on Friday, the wrong way option traders went home loaded on calls. So that was just an end of day at the end of the day. And that was a short-term concern. And what I wrote about was, look, that may be a problem on Monday. So let's just take note of it. And you just see that these option traders, and I'm not talking about option traders in general being wrong way, but when as a group, they lean on one side bullishly or bearishly, and I measure that on a day-to-day basis as well as on an intermediate basis. When they all lean on one side, historically, they just dead wrong, probably 99.5% of the time. Debbie's asking me, will you remind us, Greg, when the time comes that the market internals are aligned? Debbie, if you're here, you're going to hear it. I mean, that's what we do. And one of the advantages of being in the green room is that, yes, I'm going to tell you because I look at this every single day. And I haven't been talking about it much because it hasn't been anything to tell you. And so, you know, it's just been rather neutral. But what I have said here in the room as this market was going up, and I wrote in the letters, is that, look, I can't fight the trend, but this deteriorating breadth is a concern with these option traders, you know, buying calls. So while it didn't reach this ultimate extreme level, you know, this was at a higher level and breadth was deteriorating. And it's like, hey, you know what? This is like an accident waiting to happen. And I'm just waiting for whatever. And so, you know, Trump puts out that tweet and here we are with this correction. And look, hopefully it gets down to the 200. We get this 5% correction. Everything lines up. We start loading up on what showed relative strength, maybe ETFs that looking good, and we make more money. Right. So, I mean, that is the game plan there. Divergent, yes, Tony. So what I'm saying is that look, and I wrote this in the letter. And look, if you're a letter subscriber, you read what I wrote. And I said, look, the markets are going up here. The trend is up, but why isn't breadth at an extreme? Right? Why isn't breadth? Because of the deterioration, what's going on in the market. And if you look at, and I mentioned this in the letter, the leadership was beginning to falter. It didn't make a new high, and then it gapped down. Intel getting shellacked, right? Accidents beginning to happen. You heard me say that here. I said there's accidents beginning to happen. There's cracks in the armor that are here. So these are the warning signs that occur that tell us, look, the market always masks the underlying deterioration. Always, historically. I've been doing this about 30 years, and always the devastation below the surface is much worse than what you see in the market. So that's why, ETFs are safer than individual stocks, but you won't make as much money. So you better have your game plan together with what stocks you're going to be in, your money management, your position management, and so on. And just knowing what I just said historically, that look, the cracks in the armor happen. Stocks are going to be down 25%. Maybe the market's down 5%. There's going to be stocks. There was one I saw last night. I mentioned to Dan, was gapping down like 45%. This
STMP.
Yeah, STMP. I mean, this thing is getting decimated. So know what you're doing, know the warning signs. And, this is down from 280 level. And now it's at $42. People here losing, all their money because they don't have a plan. Anyway, let me turn this over to Dan. It's getting late. Let me get the market open here.
Yeah, I just shared with them that ETF trade that we stopped out, $5 gain though. All right, yeah, we got a lot of gappers here. Open positions, we don't have many, which is good. Google call spread, Costco call spread. I posted yesterday Katos over the high is a put spread, and it's gapping up, so it's still a valid trade. So it's a gap breakout here. That looks great. I'm going to put him here actually as a long idea. And then so that was the advice, the weekly, the advisory, we have one open position. It's not looking great right now. 2 days ago on this big bullish gap down reversal, we sold an added money put spread, $2 wide. Our stop is 34.18, and I'm just going to let it ride. Y'all were mentioning China currency. Here's the China ETF. Yeah, it looks lower. It's 41. You got a prior low here in the 38s. All right, I'll do all these gappers and then just continue through the market open. 45.50. That's a bullish gap, 30-minute high, fairly new IPO. That's not bad. 23.83, gaps too excessive. Bravo Romeo, I'm not sure if this one was earnings, but you have a bear 1, 2, 3 from a rounding top, gapping below. That looks like a great day trade, 10-minute low. BDX 223, it's a bearish gap. We got to find our entry. Monthly looks lower, but we got to work an entry. And as you know, I'm just looking for tier 1 trades. This is a very bullish pre-market picture right here. Wide range igniting, buy setup 50%. I'm going to put this here. Old InBev, that's the liquid marijuana stock. That's in our cannabis universe. TSG 2150. Bullish gap, the monthly has a lot of room. But we got to pick our entry. Intel was in the journal yesterday. You know, Greg talked about the news, them missing, and now it's broadcast even more. That's a big ugly gap. Redfin 1822, very bearish gap, but excessive. Sale 1950, same, excessive, no entry and beyond. We were watching yesterday, sloppy IPO. And there's our Costco stamp, $42. Wow. I don't know. I mean, I don't know what this thing's going to do, but let's watch it. And maybe my inclination is when something gets shellacked is to fade it. If I see a bullish setup, and then I'd sell a put spread. This thing just blasted yesterday. Wow. Wow, and look at that no-brainer entry right there. Wow, that is a no-brainer entry right over $1.39. You know what, Greg? I'm gonna put this in a. Let me take a screenshot. That is a beautiful lesson on how to trade penny stocks. Most of them are garbage, but so the rule is really simple. I don't mind trading penny stocks if you give me a setup that pretty. That's simple. That's a pro gap. TWNK. It's a pro gap. You know, the target's not that big because of the monthly, but keep an eye on that. KG. Yeah, my example is a lot cleaner. My example was a no-brainer setup. LNG is in pain. You can watch a bounce if it sets up on a 5-minute chart. This one's gapping down a little bit into